is everyone today? What an absolutely crazy day we had yesterday on the charts. It was completely insane. Good morning to everyone as you're joining. Scott, hello. Jason, how you doing? Romit, so confused, don't know whether it's up or down now. Well, I'm with you on that one, my friend. Yeah, Staunch Money, thank you. Smash the like button, guys. 68 of you in here. We have 4 likes so far. Mind you, I haven't done anything yet, so that's completely fair enough. Hopefully, we can figure something out. Who have we got here? Tom, Finn, Alexandru, thank you for everything that you do. You're so welcome. Mark, Faith, Ian, Rocky, Claudia, good to see you able to join us from work. Or no, you have Fridays off, not Thursdays. Victor, Ben, Rata, Ryan's in the house. What's going on, legend? Rebecca, Alicia. Good to see so many people from the TTC tribe. Theo, Janet, you're all here. Absolutely killing it. Lucky's in the house. Josh. All right, let's talk about this. So first of all, we'll just go back a little bit. We are in the dead gap zone, so no point really talking about current price action. This is the most highly manipulated point of the day, so we need to kind of just let that do its thing and wait for Asia to actually open. So in that time, we may as well just quickly talk about what happened last night. Now, you may remember on yesterday's update, we were sitting here in the dead gap zone. We were expecting one more move to the downside. I've actually forgotten the level that we talked about on Bitcoin. I do know it for Ethereum, but I can't remember the level. But either way, we did get that final hit to the downside. And we were talking yesterday on the video that there may be an opportunity for a trade, but you would want to be out or at least protecting that trade before the news event. So what ended up happening was once we did hit that final low, we did come up to create a W formation. This trade right here, I actually posted it in the Discord, in the Pro Charts, with a warning saying that we may get a W. I had an area of interest, which I'll show you, but there was also a previous low of the day at 22,850. But understand you counter trend trading before a news event, so you got to know the risks and own that. So this was the chart at the time. We had that final hit that we were waiting for on yesterday's video. We had the move to the upside that was sitting under the 50 EMA. That gave us the first side W, and at this point in time, our condition was we just needed to get the second side W. So going back to the chart, you can see here that we had the two areas, the previous low of the day, which was this yellow line here, or the area of interest. Price came back exactly to the previous low of the day. That was the trigger to enter. Broke the 50, went into a board meeting, came very, very close to the 200 right before the news event. So at that point in time was the time to either take your profits on that trade if you don't want to sit through a news event, or at least take partial profit and move the stop to break even. Anything after that was just luck. So certainly not going to be one of those traders that said, I called this. I didn't call this. Nobody could have known that was going to happen. This move here could just have easily gone 100% the other way. That is why if you're going to take a day trade and you have the setup and you have your trigger, if it's getting to the point where it's close to your take profit prior to the news event, at very least take some profit and protect the rest of your trade by moving your stop to break even, or take the whole thing and sit out. You know, there's always going to be another trade. That's your decision to make as a trader. But in this case, if you did hold on, we simply got lucky on that. And at the end of the day, what this is was we had our 3-level drops from the M formation that we identified earlier in the week. We had that. We had the W formation reversal. We had the break of the 50 EMA. We had the board meeting. And then this here is a level 2 rise, which essentially was a straightaway trade, which was an extremely crazy straightaway trade, but that's what it was. And I want to talk about this particular candle right here. Now, just a disclaimer before I explain this, because It is something I am back testing currently, and I currently don't have enough data to make a completely definitive decision on it and say, yes, this is a thing. So I'm just putting this out there as something you may want to watch yourself, but it's not a guarantee and it's certainly not a trade signal. But one thing I have noticed a lot lately is when we do have a news event that is a highly anticipated one that you see a lot of people talking about on social media, right before, like literally the 15-minute candle before the news is released, we will have a move in one direction and then the news comes out and we move in the opposite direction. Now, when this candle was forming last night, this was the 15 minutes before the news was released. And in the Discord, we were talking about it. And I kind of challenged the crew over there to what is happening here? Because what we're taught as retail traders is that a bearish engulfing or a big bearish candle is a sell signal, right? Like a rejection off an EMA, big bearish, that's a sell signal. However, when you understand the market maker method, what you logically understand is that if all retail are identifying the same sell signal and they are opening up short positions, there has to be someone on the other side of that trade to buy it. So if 99% of retail are taught basically the same TA, that everybody should be shorting and longing pretty much around the same areas. So who is buying, right? And the answer obviously is the market maker, because the market maker has to take the other side of our position. That is exactly what providing liquidity means. You've probably heard that term a lot. The market makers provide the liquidity. What does that mean? They have to provide the other side of your trade. And that's why their goal is always to sort of trick you to believe price is going one way when really they're just going to send it the other way. So 15 minutes before the news event, when you see a big scary red candle like that, you're intentionally being tricked by the market maker to believe price is going to tank as the news comes out and open short positions. But what the market maker is doing here, because the candle is red, the market maker is buying while you're selling. And therefore, that allows them to fill their bags, and we can see, the follow-on effect from that. So just to take that theory back a little bit as well, just to fully explain it, as I said to you, when retail is selling, the market maker buys. This is how the model works, right? So you have your M formation. This is usually retail doesn't go short on that, but there'll be some other trigger where the market structure changes. Retail usually opens short positions around level 2. So the M formation or the W formation, something else is happening there, which I'll explain. But once that is over, the market structure has changed. You have EMA rejections, just depending on how you trade as a retail trader. There are many, many triggers at this point for you to go short. Maybe your indicators tell you to go short, etc. And level 2 is usually where retail opens most of their short positions. The entire time that this is happening here, the market makers are buying, right? Which sounds like it doesn't make sense, because that means they bought a position here and price went all the way down here. You have to understand that when we as retail open a position, we can get our entire contract filled, right? For the most part, because our bags aren't that big, right? In comparison. But market makers can't just go and put in an order on an exchange and have that entire order filled, because they're dealing with way too much money. And if they were to try and get an order filled in one spot, they're going to massively move price, which is going to hurt them because their average entry ends up being rubbish. And that is why they have to trap us with stop hunts and things like that, because those stop hunts are them accumulating contracts as well. And so all this way down, whilst as a retail trader, you'd be like, I would never buy this all the way down, because at some point in time, you're going to run out of money and you're going to be in a massive drawdown. It's not the same for a market maker. For a market maker, all they're doing here is buying the absolute minimal amount to fill the other side of your short position. Where the market maker adds the final position for them, their biggest position of all, is at the M and the W. So this is before we suspect it usually as retail traders, if you don't know this method, and where an M and W is forming, to a normal retail trader would look at that as consolidation and believe that we're going to go down further after consolidation. Why? Because we had a move down, consolidation, move down, consolidation, move down, consolidation, move down, consolidation, move down. You think you're in a trend and it's just going to keep going forever, but that's because you're not taught that it happens in levels, right? And so the psychology of the three is people believe things happen in threes and third time lucky and things like that. They know that they can get retail to commit to most of their position at level 3, and that's where the trend starts to change. So what is happening here when retail believes it's consolidation is actually a W formation forming, and that forms because this second peak here doesn't return to the first peak, because the goal is to keep everybody who's shorted at the first peak trapped. So now these people are trapped, price doesn't return there. Now they've got that they can use as liquidity to drive price the other way. And then throughout this entire accumulation period, in small parts, they're adding their biggest position. So from this point here, they're in a drawdown, yes. But from this point, once the W is formed, they are already in profit by rise level 1. Now, on this here, this green candle right here is rise level 1. So at this point, the market maker now is already in profit. Then, then as we get to this news event right here, he gets a bit greedy, right? Because he's now already in profit. He knows that he can trick retail into believing that if he prints a big red candle on the chart right before the news event, oh, somebody's got the news early, it must be bad, and everybody else opens shorts, and then he gets to fill more of his bags on that candle, and bang, I shouldn't keep saying he, I apologize. The market makers, it's obviously a lot of people. But yeah, so the bags are fully filled at this point in time, and all of this is 100% profit. So that's actually what is going on behind the model. And that's why I've been watching very closely for news events, because we know that news events are the ones that move the market fast, but it's also usually the fake move as well. And we usually see a full recovery afterwards. But I've been watching this 15-minute candle on a lot of news events prior to get a bias on which way the price might break out. And again, also said this in the Discord last night, that a lot of people were just expecting price to dump from here, that we're going to get a 1 hour level 3 drop, I think it was, which was fair enough. But when it comes to a news event, you have to understand that the model gets disrupted, and you have to just remain unbiased and trade what you see. So if you are tracking that theory that they are filling their bags in the 15-minute candle before the news event, if you had a bearish bias, this candle right here should have switched it. And not to say that you should have traded it, because it's very, very risky to trade a news event. But if you continued to convince yourself price was going to dump after this candle here before the news event, I'm sorry to say, you're an emotional trader. So that's where we are now. That's what's happened. If this here was rise level 2, which coincidentally just turned out to be a straightaway trade, then that means that this level here was just a retracement. Obviously, after such a big move, we're going to come back to recover some of these previous vector candles at least. And then are we now in the level 3? So that's the point that we're up to right now. So I just missed all of those comments because I just got into such a zone explaining that. Jesus, sorry guys. So here we go. So this is the retrace. Is this level 3? It sort of does make sense for it to be level 3. We do have this stopping volume candle, final stop hunt, final damage. The only thing that worries me about it is it's in the dead gap zone, which, as I said to you at the start of this video, that is the most highly manipulative point of the day. So if you were to take a short off that, it would be fair enough, because the market structure is there to believe that this should come down now. However, you're taking it in the dead gap zone and it may not play out. But at the end of the day, if you have your setup and you have your trigger, you take the damn trade. That's just it. Stop letting emotions get in the way of you entering trades. Decide what your setup is. Decide your trigger. When you get that trigger, you go in no matter what. So if you believe at this point in time that this might be an M formation, I'm not so sure about that myself, but you may believe that, then you would take a short off that. You may also believe that what is happening right now is going to be an M formation. That would also be fair. You would go short off that. But before we make that decision, no, actually, I'm not going to say that yet. If, however, you're uncertain, you don't have to take the M and W trades. The M and W entries are for people who are very, very confident at this method. The safer entry, if you're unsure, would be to wait for price to break those EMAs and for the 10 and the 20, so the green and the red here, to get back under the 50. That would be a more, conservative entry, but a safer entry, because now you definitely have a change in trend and you would be expecting, at least a 50% recovery of this candle right here, but hopefully a full recovery if last night turned out to be, I'm not going to say a fake move. I've seen a lot of people on social media say it's a fake move. It's going to come back down. It's not fake. The whole pattern has played out here. We had a W, 3 level rises, stopping volume candle. We're waiting for an M formation. It's just complete. It's not fake. It's complete. The only problem we have with this current week's model is that the weekly cycle is completely off track now because of last night. But the daily cycle is just playing out as normal. So that's one thing there to look out for. Sorry. And if you're unsure, certainly would not be a bad idea to wait for a break and retest of the 50 instead of trying to get in on the M. Just depends on your level of confidence with the method. One thing to point out is high block is not particularly helping us at the moment. It's pretty, let's hope this opens up now. Here we go. It's pretty flat. So we don't really have, a bias towards longs or shorts. It's very interesting to see this, however, how the price action last night, how the bias changed so quickly. This goes to show that when price broke out, many people FOMO'd into long positions, but at the same time, many traders believed that it was a fake pump and tried to short the top. And then eventually we came back for the final rise. And so this right here, what you're seeing, how it went green, red, green, when you go back to Bitcoin, it was here. This was when everyone FOMO'd long. This is people trying to pick the top to short it. And then this was the final one where they went, oh no, that was wrong. And they opened a long position again. So are they just trapped all over again? Basically, yes. So the delta doesn't tell us that much, but what we do want to pay attention to is these levels here where price can come back to, that there is a lot of liquidity for the market maker to come and get if they want to come and get it. We'll go through those levels on a chart, but also we need to look at that on the other side as well. And we've got this area up here at 24.2, which is another level. Let's just say 24.3. It's very close. That's another level. If they did decide to strike one more level higher, they're going to wipe out a lot of liquidity there as well. Now, the reason I kind of am interested in that area is because it is the very top of the area of interest. Now, also, I should point out that those levels, I'm so sorry if you can hear all that noise in the background. It is ridiculously windy today. And I do have the echo cancellation, whatever, off. So hopefully you can't hear it, but it's so loud here. However, anyway, let's get back to it. So just to explain about high block, that all of these levels that it points out are only estimated levels. So when it says 24,299, that's 24,299, saying $195 million worth of shorts will be liquidated if price gets back there. But it's not an exact. So you kind of, when you're looking at a chart to see if price went there, it's around about there. And the reason that I point that out is because if we have a look at this wick, let me just turn this off so you can see it clearly. Where is it now? If you have a look at this red wick right here that happened at the start of the dead gap zone, the very top of that is 24,236. So we're like, I don't know what, $60 off that high block level. This could have done it. This could have already wiped out those positions, and we're just waiting for high block to catch up. So keep that in mind, because that would actually add confluence to you believing that we're going to have an M and head down today. The other the other thing too is like Bitcoin has just been an absolute magnet to this zone for a really long time. The zone being between 24K to say 24,250. And when we go out to a higher time frame, we'll go out on the 4 hour. You can see here how much it's been a magnet to that zone, since back here, since 20th of July, pretty much. That's 1, 2, 3, now the fourth attempt into that zone. That's where this gets really, really tricky, because if it's going to take 4 attempts at that zone, does it actually want to break through now? I think there's equal chance that Bitcoin can break through and head up higher, as much as Bitcoin can head down and wipe out some of that liquidity. At the same time, it could head down, wipe it out, create a higher low, and then push to the upside. So if you are taking a short position off a 15-minute time frame, it is only a scalp. Definitely keep an eye on the higher levels, especially 23,300. A lot of 100x traders will get wiped out there if price does come back, but that would be a decent enough day trade short if you get your whatever your final signal is. The other thing is that on this move here on the 8th of August, we did print a new market maker candle, which is interesting. And that is the one that we've been wicking into ever since then and have not yet fully recovered. So if we do come back to fully recover this candle right here, then, I would say there's a very good chance that we're going to go higher. And, these lines here that we've been talking about, 24,400, 24,870, and then also 26,500 are still going to be in play. So if you're trading a higher time frame, what you'd be looking for is for this to pull back and then potentially move out to the upside. If you're trading the lower time frame, the 15-minute time frame, you could trade that pullback as a short position if you think it's actually going to happen. Down back into the area of interest at a minimum, and then reassess from there. Now, the final problem that we have with shorting this where it is now and believing that it's an M formation already is that we have the potential to have a multi-time frame 3 hits to the high at level 3 going on. It's not there yet, but it's possible. So a multi-time frame means we had a hit here to the high, which was at the basically UK-US changeover. We've had a second hit to the high here at US. And will we in Asia come back to create a third hit to the high? Hold on, where's my tool? That's a possibility as well. So that could be the trade setup that's going to happen today. Can't know that until Asia opens and sets its initial high of the day, but I would watch out for that. And then if the third attempt cannot break through that level, that's going to give you a little bit more confidence that we will come down today instead of up. If the third attempt, or even the fourth attempt, if you get a fourth attempt, if they return here on a fourth attempt, you would expect that it's going to break up higher. So ideally what you want to see after the third attempt, if you're to have a short bias, is you want to see price reject here and break an EMA, then create a lower high. Then you're going to believe the 3 hits to the high can't break the level is the trade setup of the day. However, if we get to here, if we get into that third level and we come up and create a higher low, you're going to believe we're breaking to the upside. That's basically the trade setup if you're trying to take a day trade today. I wouldn't have a bias. Also, I should point out, I don't know if I already have now because my brain has just turned off, but it's my die day today. So I'm not feeling that confident about any trades, to be honest with you. Just bear that in mind. And also, if you are new here, I forgot to say at the beginning, welcome. And if you are returning, welcome back. Be sure to smash that like and subscribe button. By now, you have hopefully learned something, and I have hopefully earned that like. So would highly appreciate it. But this is what I'm looking at on Bitcoin. Let's take a very quick look at Ethereum, because Ethereum was a beast. And we want to go out to the higher time frames first because we've got some relevant information going on the higher time frame for Ethereum. We can see here, this is the previous market maker candle that has not yet been fully, fully recovered. What I like about it is that it also lines up with the 800 EMA currently, which we have at this point in time just wicked under. But again, that is, we don't know until Asia opens what's going to happen. But this is the zone. If Ethereum is going to reject and pull back or fully reject, this is the zone that it should do it. So now that you've identified that on the 4-hour time frame, we just want to get an idea of what is going on the lower levels. And it doesn't, at this point, it does not really look like it wants to reject on the 1 hour. But one important thing to note with Ethereum that's actually very interesting is that on high block, when you have a look at its liquidation levels, let's have a look. Now, I've gone out to the higher tier for this one because basically Ethereum has high levels of liquidity at every price, and the market maker is just banking money both sides of the trade, right? So I'm more interested in these three zones here, number one, and then if we take them out, I'm looking at these three huge zones here. That's if we're to head down. To the upside, this one has already been taken out on that candle up there, and we've got this level here at 1894 is the final very big level. That doesn't mean there's not liquidity above. It's just this is one of the highest levels at 1894. So if we go and mark that on our chart now at 18, let's just put it 1894. Again, remembering that high block is an estimation. It may be a little bit off. This wick could be the wick that has already taken it out, or maybe we're coming up still to take that out. The interesting thing about that is if we do get around there, that is going to be almost, this is going to be hard to see, but I'll zoom it out. That is going to be a full recovery of this weekly market maker candle right here, which actually goes up to this point. So if Ethereum is going to reject, it's going to be off that area. It's also the weekly 20 EMA. Just makes sense, really, unless it can push right through it, then we should expect more upside. So that's really the level to watch for Ethereum is can it get back up and above 1894? If so, it's a tricky area to trade, so I would probably just leave it without a pullback. But if we can get a pullback, those areas that I pointed out to you here, let me just quickly go over it again. They pull back to around 1800. And the reason that I like that area is because it lines up here with the previous high of the day. So we may only get a very small-ish pullback on Ethereum and then see further upside. That would actually be good if you could get an entry there. Or it may keep going and there's just no entry, and that's how it is. We just have to wait a bit longer and have a bit more patience. Let's look at the 15 minutes. So that candle has turned green already. Looks like it does want to go up for that level. Let's see. It may repeat this level. You may end up getting a 3 hit to the high type of trade. It may break that level and then we just have to wait a bit longer because it's not really the best trade setup for where it is right now. Do I have anything else to tell you? Yes, I do. By the way, I was noticing last night on my YouTube comments how many fake accounts comment on my stuff, pretending to be me, as well as all my other social media. just know that it's all fake. I don't trade on behalf of people. I don't ever ask for investment. I don't fall for that kind of stuff. No matter what platform you're on, you are not talking to me. I intentionally never respond via DM because of that reason, because you cannot tell the difference between whether it's me or a scammer. So don't even message to say, is this the real you? Because I'm not even answering that. If you don't get an answer, it's the real me. If you get an answer, it's a fake account. That's the rule, right? So just, yeah, say Discord, like, you know, there is a scammer channel in our Discord. So if you happen to do that, so if you happen to get that, you can report it. We remove them in there. But I mean, look at these here. There are everything: Twitter, TikTok, YouTube. It's everywhere. So there's nothing I can do about it. That's the thing. That's why it's useless reporting it to me, because there's zero that I can do about it, and it gets a little bit frustrating. So just know that they're fake accounts and don't fall for it. There was something else I was just going to quickly show you, by the way. Oh, it was the heat maps. The heat maps right now are very thin, in my opinion, which kind of makes sense. We don't have very large orders either side of price right now. The largest order we can find is at 24,250, which I don't see that as being a really big number that would heavily reject price, to be honest with you, but it is a level to watch out for the reason being that it lines up with the high block level. And sorry, this is on Bitcoin, and it lines up with the top of this zone as well. So that's the only reason to keep an eye on it. The actual heat map isn't telling us much. And for Ethereum, it would be the same deal. Just watching this 18, let's just say between 18, what is this here? 1880 to 1895. All right, I think I'm done, guys. Let me just quickly scroll these questions and see if there's anything to talk about. Oh God, my cat is having a heart attack over there. I don't know if you can hear her. No, I think we are done with the questions. Finally, what I'm going to do on yesterday's video, if you caught it or not, I did start to quickly go through some altcoins to invest in if we do have one more final shakeout. I still believe that is a possibility by the end of September. So, even though we have this move up now, I don't think that's invalidated. But what I'm going to do is I'm going to update those charts on Coin Panel for those of you that for those of you that are following me on Coin Panel, I'm going to update that and start a investment watch list. I may not do that today on my die day, but I will do that over the weekend. So be sure to check that out there. If you are in the Discord, however, you do not need to join Coin Panel because you guys get my soul. So I'll post them in the Discord as well. But yeah, either way, Coin Panel and Discord will have those updates. And that is it from me for the day. Be careful. Wouldn't be a bad idea to just not trade. But if you get the perfect setup and you get the perfect trigger, you just take the trade, no emotion. Die is in hand. No, die is in death. Like my life doesn't exist today. That's how it is. It means I need to go get a massage. Is what it means. All right, guys. I will see you soon. If you want to join the Discord, the link is in the bio. It's the beginning of the month. Perfect time to join. And I'll see you next week. Goodbye.